Hi there, Ravasini from New York City reporting on the Manhattan real estate sales market. Let's take a look. Since the coronavirus shelter in place took effect in the middle of March, this is the first real estate sales report that is greatly affected by the COVID-19 crisis. Remember, this report focuses on closings, which means there's always a lag of few weeks between an event in the marketplace and its repercussions on closings. Contract activity slowed sharply at the beginning of the quarantine, and the market essentially came to shut down until June 22nd, when agents were able to show properties in person again. The data in the context of this report reflect the rules enacted to limit the spread of the coronavirus. With this historic halt, the results in the report are, in most instances, new negative records. The number of sales dropped over 54% compared to the same period last year. This drop is the largest in the last 30 years. The median sales price dropped almost 18% to reach $1 million. This is the largest decline in a decade. Keep in mind, this is not a fire sale due to COVID-19, because if you remember, if we compare the data to last year we had a change in mansion tax that helped a large amount of luxury closings. Therefore, we are comparing this data to a very specific quarter a year ago. The average sales price decreased over 10% to reach $1.88 million. The average price per square foot decreased almost 7% to a level of $1,642. The listing discount metric reached 7.9%, up from 5.9% last year. Listing inventory fell 17.6%. The highest level of inventory was reached in February, and from there the level of inventory started to decrease very quickly. Only in June we noticed an uptick in listing inventory, but that is relatively moderate still. The absorption rate, which is the speed of the market, reached 13.8 months, which is 80% slower than the same period last year, and this is the slowest moving market in 11 years. Understandably, during the quarantine, many sellers decided to remove their property from the market or postponing putting it on the market. More inventory is expected to hit the market during the summer months, since everything was on hold during the spring. In the last 2 weeks, since agents are allowed to show properties in person again, we have been seeing a brisk level of activity. In the saga that is the current real estate market, let's see how the story unfolds in the next quarter. In the meantime, if you have any questions, you know how to reach me.